the trade I like, I mean, this is not for everybody, but I really like VXX. Not always, but if you read one of the posts on Discord that I wrote sometime earlier this week, what I mentioned is that VXX benefits when the VIX term structure is inverted. So if let's say the 9-day measurement of vol is higher than the other measurements of volatility, whenever we have an inverted VIX curve, kind of like what's it's not inverted at this time, but it's been inverted. Let me clean this chart up a bit. Okay, so right here, this short period of time, just a few days, where the curve was actually inverted. We see this by the fact that the 9-day was a lot higher than the other measurements. And we got our buy signal, our VIX buy signal afterwards. We only get a VIX buy signal after the curve's inverted. So what I'm doing is I'm positioning myself such that if the VIX curve does invert again, I am holding, in this case, VXX, which would, technically outperform VIX. There is no way to directly trade VIX. You can trade options on VIX futures. It's not really possible to trade volatility directly. So VXX allows us to trade, but the VIX futures in essence. So it's kind of complicated. It's not a trade for everybody, but it's what I'm doing. I like it. It's very short-term nature. So if it's not the type of thing that I'm buying calls on with 6 months to expiration, right? Like I'm buying calls on VXX that expire in a week or in 2 weeks and rolling them forward. For example, I had calls for this week that if you look at the price of VXX, it had its spike earlier on in the week and then it went down. So it worked, right, for that short period of time, and I can't stress that enough. Like, it's very, very short-term oriented. You get in, you get out. So as you can see, this is why I don't like recommending this product. It's not for everybody. This is an ETN. It's not even an ETF. It's an ETN. So there's credit risk aspects there, but it still works when the VIX curve inverts and that 9-day VIX is higher than the others. VXX outperforms VIX. So if VIX went up 9%, for example, I would expect VXX to be up maybe 15% or so. What would be the max days to expiration you'd consider holding VXX? Oh man, I would just go personal. This is me, my personal preference. As you can see from this chart, this is not something you hold on to. Right? Why would you want to hold on to something like this? And the problem stems from the fact that every single day that the VIX term structure is not inverted. So whenever the market is normal, that ETN loses money. However, oh shit, sorry for cursing, but what do we have here? It appears like the VIX curve. Look, folks, everything has a curve. Everything. Notice that I've shown you Eurodollar curves, Fed funds curves. Now I'm looking at VIX curves. Everything is curves. So these are the VIX futures. They also have a term structure. This is the March contract. This is the April contract. and May contract and so on. What's happening right now is pretty much telling us, hey, the VIX is about to invert. That 9-day VIX is about to go flying higher. And we're seeing this first in the futures. The shortest measurement of volatility in the futures, the VIX futures, is higher than the one with the most amount of time. And this is completely backwards. So under this scenario, VXX outperforms. But here's the problem. The market spends most of its time looking like how it just shifted, kind of like this, with that shorter measurement of volatility. Why does it keep moving on me? Gotta lock it or something. But the market does not, the volatility does not look like this most of the time. Well, I guess the market's just moving a lot, and that's why this line keeps moving. Well, what we're used to seeing for VIX, by the way, is a market like sloped completely opposite of how it's looking like on the chart. This is what we want to see in VIX, where the shortest has the lowest price, and the one furthest out has the highest price. Why? Because the further out in time you go, you're more uncertain about the future. However, this futures curve is pretty much telling us that the market is worried more about the right here, right now. And tying this back to VXX, the way VXX works is that every single day, at the end of the day, at the close, the prospectus kind of goes over the process, but what they do is that they buy and sell front month VIX futures and next to front month VIX futures. Therefore, if for example, on a day like today, they're long these and short these. So since they're long the front end of a curve, and the front end of a curve is going up, today VXX goes up. However, if this portion of the VIX curve was inverted, meaning, or sorry, not inverted, but normal, where the March contract was trading lower than the April contract, and the April contract was trading lower than the May contract, then VXX would be going down and down and down, kind of how we saw in that other chart that I had, like this, just over time decaying, just literally going to zero. So I hope that kind of answers the question. It's something that I would not hold. I wouldn't even go as far as a week. A week tops. It's one of these things that I use very specifically for covering my ass during a very short period of time, because it doesn't work any other way, or at least it hasn't. So I hope that that helps. All right, folks. Thank you for your time. Thank you for your attention. I hope that this